Forming an LLC takes about 15 minutes online and a small filing fee. But I've seen business owners spend years and thousands of dollars cleaning up mistakes they made in those same 15 minutes. I'm Misha Vabern. I'm a certified public accountant, and I'm going to walk through the most common, most costly LLC mistakes I've seen so you could avoid every single one of them. And some of these will save you money. A couple of these could save your personal assets if your business ever gets sued. So let's get into it. All right. So mistake number one, treating the LLC like some magic force field. All right. Because this is probably one of the biggest misunderstandings I see by far. People think that simply forming an LLC automatically protects your personal assets no matter what they do afterward. And that is not how it works, right? The LLC gives you what is called limited liability protection, but that protection can be stripped away if you do not actually treat that business like a separate entity. And courts call this piercing the corporate veil. So when it happens, a judge essentially says, okay, you treated this business as your personal piggy bank. So I'm going to treat it in that way too, which means your personal assets are now going to be exposed in a lawsuit. And the number one cause of this is because of commingling funds. That means mixing personal and business money in the same account. So paying your personal bills directly from the business account or moving money back and forth with no real clear book keeping or record keeping. That is also going to be a reason, right? So to protect your liability shield, you need to separate your business bank account. You need to pay yourself through a draw or a salary instead of just sending and spending straight from that business account. And you need to keep basic records, even simple things like meeting notes if you have multiple members, or a written operating agreement that outlines how that business actually runs. None of this is complicated, by the way, okay? It just requires discipline. And it is the difference between an LLC that actually protects you and an LLC that is just an expensive piece of paper. So let's talk about mistake number two, messing up the S-Corp election. All right. So if you plan to elect an S-Corp tax treatment for your LLC, the paperwork has some very specific rules, and small errors can cause some real headaches for you down the line if you don't get this right. So first, the deadline. To have your S-Corp election applied to the current year, you generally need to file Form 2553 by the 15th day of the third month of your tax year. So for a calendar year, that deadline is generally going to be March 15th, right? Depending on the date it falls. If it's a weekend, then that's going to impact things, right? But if your LLC is brand new, you get 2 months and 15 days from your formation date instead. If you miss that window, your election does not just disappear. It becomes effective the following tax year instead, unless you go through what's called a late less S election relief process, which I can explain in a moment. The second mistake is the effective date you write on the form cannot be earlier than the date your LLC actually existed. And I know that sounds obvious, but this actually happens more often than you realize, that the IRS now has to print it out. Like they have to print out a caution directly on the form itself. So if you formed your LLC in June, you cannot say January 1st as your effective date, right? The third mistake, every signature on that form 2553 needs to be real, a wet ink signature, not a typed name, not electronic signature. And this trips a lot of people up who are used to signing things digitally these days. So that is going to be key to understand. Fourth mistake, and this is one that's surprisingly common, is filing Form 8832 in addition to 2553, when you only need to just file 2553. A timely Form 2553 already handles the entity reclassification automatically. So filing both forms creates duplicates, conflicting requests at the IRS, which causes processing delays and confusing notices. You generally only need Form 8832 in a very specific situation, like switching your C-Corp taxation instead, not just a standard S-Corp election. So if you already missed your deadline, do not panic. The IRS actually has a process called late election relief under Revenue Procedure 2013-30 that allows you to be able to file late and still have the election applied retroactively as long as you can show a reasonable cause for the delay and you act within 3 years and 75 days of your attendant effective date. This generally requires a written explanation, consent from all members, and making sure all of your tax filings since that date are consistent with S-Corp treatment. So this is detailed enough that I would actually recommend reaching out and working with the CPA to help you handle it correctly rather than trying to attempt this thing alone. All right, so mistake number 3, forming your LLC in the wrong state, right? I see this constantly. Someone hears that Delaware, Nevada has great business laws, so they go ahead and run and get their LLC there, even though they live in an actual different state operating their business somewhere else entirely, right? So here's the problem. If your LLC is formed in Delaware, but you're actually doing business in your home state, you generally still need to register as a foreign LLC in your home state anyways. All right, so that means you end up paying filing fees and following compliance rules in 2 states instead of 1, and with no real benefit unless your business genuinely needs Delaware specific legal advantages, which mostly matter for larger companies, honestly, seeking outside investors, not most small business owners, not local kind of businesses. So just keep that in mind. For the vast majority of small businesses, the simplest and cheapest path is to form your LLC in a state where you actually live and operate. So you can be able to save the multi-state strategy for when your business has a genuine reason to be able to actually need it. All right. Mistake number 4, ignoring state level taxes after an S-Corp election, right? So here's something people forget when they get excited about S-Corp payroll tax savings. The federal election does not automatically eliminate state level taxes on your S-Corp. So some states may actually charge their own separate tax on top of everything you've already discussed. All right, so as an example, certain states actually apply what's called a flat percentage tax on the S-Corp net income with no minimum tax due, even in a slow year. All right, so a few states also require you to file a completely separate state level S-Corp election on top of the federal one, or the state will simply continue taxing you as if you're still a partnership or a sole proprietorship for state purposes. So before you assume your S corporation savings calculation is complete, you want to check what your specific state requires, right? The federal math is only half the picture. So you want to make sure that you get the full picture when it relates to this. All right. Mistake number 5, missing your annual report or franchise tax filing. Most states require LLCs to file some kind of annual or biannual report, sometimes alongside a franchise tax payment, just to stay in good standing. So if you miss this filing, and consequences can actually range from late fees to losing your good business standing to the state dissolving your LLC entirely without even realizing it happened. Like sometimes until you discover it during like a bank loan application or a legal dispute, which is probably the worst possible time to find this out. All right. So you want to make sure you put this deadline on your calendar with a reminder the same way you would for a tax filing deadline, right? It's easy to forget precisely because it does not feel as urgent as a tax return does, but the consequences of ignoring this thing could be just as serious if you're not careful. All right, mistake number 6 that I often see is skipping the EIN and using your social security number, right? So a single member LLC with no employees is technically allowed to use the owner's social security number for some purposes instead of getting what is known as an employer identification number, also known as an EIN. But I almost never recommend doing this. All right, getting an EIN is free. It takes about 10 minutes on the IRS website and immediately gives you a layer of separation between your personal identity and your business identity, right? And it is also generally required to open up a proper business bank account, right? Which circles right back to mistake number 1, keeping your finances separate, which is going to be key with your business going forward to give you that LLC protection, but then also being able to better manage your business finances, right? So if you ever add a partner, hire an employee, or elect the S-Corp status, you're going to need an EIN at that point anyway. So just get it from day one, save yourself the extra step later, and it's going to be a huge help for you going forward, right? So mistake number 7, not registering as a foreign LLC when you expand. So if your business starts doing real business in a state other than where your LLC was originally formed. Things like having an office there, hiring employees there, meeting up with clients or serving clients there. You generally need to register as a foreign LLC in those states too, right? A lot of business owners do not realize that this applies until they're too deep in the operating of the new state, and at which that point, you could end up owing back taxes and penalties for that period they were operating in without that registration. So if you're expanding into a new state, this is a quick, cheap setup. You want to make sure you handle up front rather than trying to do this and trying to figure it out, unfortunately coming out and discovering it later on. All right. Mistake number 8, assuming the LLC alone is enough for protection, right? So an LLC limits your personal liability, but it does not make your business bulletproof, right? So it definitely does not replace business insurance, right? So general liability insurance, professional liability insurance, and other coverage specific to your industry fills in the gaps that an LLC cannot cover, right? So if a client slips and falls at your location, or a mistake in your work causes a client real financial harm, insurance is often what actually pays for the claim, right? While the LLC structures protects your personal assets from being part of the claim in the first place. So you're going to want both layers working for you and not just one. So you want to make sure you have that in place, right? Mistake number 9, no written operating agreement, especially with partners. Okay. So if you have even one other member in your LLC, skipping a written operating agreement is one of the most common regrets I hear about. All right. Usually after a disagreement has already happened. And by that time, it's pretty much too late, right? So most states do not legally require an operating agreement for a basic LLC to exist. But without one, you're relying entirely on your state's default rules to decide things like how profits get split, what happens if a member wants to leave, what happens if a member dies, who has the authority to be able to make major decisions. And those default rules are rarely what business partners actually intended when they had the LLC set up in the first place, right? So I've seen 2 friends start a business with a handshake, build it successfully for years, and then end up in a painful, expensive dispute the moment one of them wanted to exit or disagreed on the direction of the partnership, simply because nothing was written down. So a clear operating agreement, even a relatively simple one, solves this before it even becomes a problem, while everyone is still getting along and thinking clearly about the business and is positive and communication is flowing, right? So this is also relevant for a single member LLC. Some states, some banks specifically ask for an operating agreement to open a business bank account or to reinforce the liability shield we talked about earlier in this video, since it is one of the major pieces and key documentation showing your LLC operates as a real separate entity. All right. Mistake number 10, not understanding your default tax exposure. All right. A lot of new LLC owners form their business, get excited about limited liability, never stop to ask the question, how are they going to be taxed, right? Remember, by default, a single member LLC is going to be taxed as what is known as a sole proprietorship. A multi-member LLC is taxed as a partnership. So that means by default, all of your business profit is subject to self-employment tax the same way that it is with that 15.3% we've covered in other videos. So a lot of new business owners do not realize this until they get their first tax bill, right? And it's bigger than they expected. And this is not a mistake that you need to fix on day one, right? Plenty of businesses are perfectly fine staying taxed this way, especially in the earlier stages, but you should know what you're working with from the start rather than being surprised by it later on. And you should revisit that question once your profit grows to a level where it makes sense for you to do what's called the S-Corp election, which can genuinely save you a lot of money in taxes, right? So if I already made one of these mistakes, is it too late, right? It's almost never late. S-Corp elections can often be fixed through the relief process, as I described before. Missing an annual report can usually be cured by filing late, sometimes with a penalty. So the earlier you address this stuff, once you notice, the easier and cheaper it is going to be fixed, all right? So another question I get is, do I need an attorney to form an LLC or can I do it myself? You can form a basic LLC yourself in most states without an attorney. Where I recommend bringing in a professional help is the tax election decisions, the operating agreement for multi-member LLCs, and any late filing or compliance cleanup, since mistakes in those areas tend to be more expensive than the cost of getting it right the first time and getting it right the first go around, right? Also, some people want to know, how do I know if my state requires an annual report? A quick search of your state's Secretary of State website will tell you, in most states list the exact deadline and fee clearly, so bookmark that page once you confirm it. Also, people want to know, is a verbal agreement with business partners good enough? Legally, in some cases, a verbal agreement can hold, but proving exactly what was agreed upon becomes very difficult in the long term. So you want to make sure you have a written operating agreement, because that's going to remove all that confusion. And it's actually far cheaper to write one now than trying to litigate a disagreement later on. All right. So that is what I want you to know and take away from this video. A few caveats, a few more things to walk away with. So LLC rules, fees, deadlines, they vary significantly by state. Everything in this video reflects general federal rules and common state patterns, but you need to confirm specific requirements with your own state. Remember, this video is for educational purposes only, but before you form an LLC, elect the S-Corp status, or expand into a new state, make sure you go ahead and talk to a CPA or an attorney to confirm the rules that apply to your specific situation, and I'll see you in the next video. Take care.